Warren Buffett was 19, flat broke, reading in a dingy college dorm room. Then he opened a book, and it rewired his brain forever. That book? The Intelligent Investor by Benjamin Graham. And Buffett didn't just read it, he studied it, lived by it, and built a $100 billion empire on its lessons. So if you've ever wondered how the world's greatest investor thinks, this is it. This is the Investor's Bible Decoded. Imagine you've got a business partner named Mr. Market. Some days he's euphoric, offering you outrageous prices for your shares. Other days he's depressed, offering to sell you his shares dirt cheap. Now here's the trick. Mr. Market is emotionally unstable, but you don't have to be. Don't let the market's mood swings dictate your decisions. Be rational when others are emotional. Buffett once said, "You are neither right nor wrong because the crowd disagrees with you. You are right because your data and reasoning are right." Want to avoid going broke? Always invest with a margin of safety. Just like engineers build bridges that hold 10 times the expected weight. If a stock's worth $100, only buy it at 70. Why? Because the future is uncertain, and price is the only thing you can control. Buy businesses, not stocks, and buy them at a discount. Warren's move? He looked for great businesses at good prices, not hype stocks or shiny trends. You think you're investing? Or are you just gambling in the stock market with cool apps and FOMO? Graham draws a line. Speculators chase trends, time markets, and often lose. Investors analyze, think long-term, and stay calm. Buffett followed this to the letter. Our favorite holding period is forever. Speculators react, investors plan. Want to win the game? Study the board. In Chapter 3, Graham hands you 100 years of market history, not to impress you, but to wake you up. Markets rise, markets fall, and guess what? They always have, and always will. From the 1900s to the Great Depression to post-war booms, history screams one message. Don't get cocky. Graham's lesson? Stocks aren't a straight ride up, they're a roller coaster. Don't chase hype. Don't panic in crashes. Understand cycles. Use them. Don't be used by them. Real investors don't ask, will the market go up? They ask, what will I do when it goes down? Because market crashes aren't bugs, they're features. Before we reveal Buffett's actual investing checklist from this book, smash that subscribe button. This channel gives you billionaire thinking for the price of nothing. Graham drops a bomb. Your portfolio is your game plan. Are you defending your wealth or hunting for profits? You want to invest in stocks but without the heart attacks? Then play defense. The stock market is your friend when you approach it with patience and discipline. Graham's talking to the enterprising investor, the one who wants to dig deeper, find value, and actually work for those returns. This isn't for the faint of heart. But if you've got the guts, the rewards are massive. Here's the game plan. Research, research, research. Look for undervalued stocks, beaten up businesses, and hidden gems. Don't get cute, get smart. Know when to play it safe and when to go for the kill. Warren Buffett once said, Chapters 8 and 20 of this book are the foundation of my investing philosophy. Chapter 8, The Investor and Market Fluctuations. The market's crashing. Headlines are screaming. What's your move? Graham's advice? Stay cool. Don't get played. The truth is, fluctuations are part of the game. You're gonna see the market jump, drop, and zigzag. It's all part of the show. But here's the catch. You don't need to react every time. It's all about mastering your emotions. The stock market is there to serve you, not to instruct you. You don't need to act every day. Sometimes the best move is no move at all. Buffett put it perfectly. The market is designed to transfer money from the active to the patient. Everyone thinks they can time the market. I'll wait for the perfect moment to jump in. Graham's response? Good luck with that. Market timing? It's a gamble. Sure, a lucky few might nail it, but in the long run, consistency wins. The real deal. Markets move in cycles, ups, downs, and all around. You can't predict them, so stop trying. Forget about catching the perfect moment. Time in the market. That's the game changer. Don't try to time the market. Let time work for you. The market's up. The market's down. Everyone's got an opinion. Graham's advice? Block out the noise. The market is emotional. It swings from optimism to fear, from greed to panic. But you're a ruthless strategist. Don't let the mood of the market dictate your moves. The key to winning is staying calm when everyone else is losing their heads. The market is a crazy roller coaster, but you're the calm driver, steering through it with discipline. Want to gamble? Go to Vegas. Want to build wealth? Stick to investing. Graham draws the line. Speculation is not investing. Speculating? It's a risky bet with no strategy. Investing? It's about value, patience, and fundamentals. Stop gambling. Build your wealth slow and steady. Want to protect yourself from the worst? Graham's rule: margin of safety. It's your cushion against risk. The margin of safety is about buying below intrinsic value. It's the discounted price that gives you room for error. It's the buffer that protects you if things go wrong. Buy low with a margin. The more you have, the less you risk. It's not about predicting the future. It's about making sure you're safe if it goes south. Build your safety net first, then dive into the opportunity. Never gamble, always protect yourself. The stock market isn't just about numbers. It's about your mind. Graham's insight? Master your psychology and you'll master the market. Investing is emotional. Fear and greed drive most decisions. But the smart investor doesn't follow their emotions. They follow logic. Fear? Use it as fuel to buy when others are panicking. Greed? Control it. Don't chase the hype. Graham says, the real money isn't in the market's movements. It's in your mindset. You want to build lasting wealth? Think long-term, decades, not days. The stock market is not a sprint. It's a marathon. Success doesn't come from chasing quick gains. It comes from patience and compounding over time. You plant the seeds now and let time do the work. Want stability in your portfolio? Graham's answer? Bonds. Bonds may not be exciting, but they're your rock, providing consistent returns while reducing risk. Bonds offer predictability, a fixed interest, reliable payouts. They're the safety net for when stocks are swinging wildly. Don't put all your eggs in one basket. Bonds are the key to staying safe while aiming for the long-term gains. Inflation is sneaky. It quietly eats your money while you sleep. Graham's warning? If your investments don't outpace inflation, you're not growing. You're shrinking. That safe savings account? Losing value year after year? Your buying power? Melting if you don't act. The solution? Invest in assets that grow faster than inflation, like stocks, real estate, or inflation-protected securities. Inflation is real. Don't just save. Invest smartly to keep your wealth ahead of the game. When you invest, you're buying a piece of a business. But here's the real question. Who's running it? Even a great business can sink with poor management. So don't just look at the numbers. Look at the leaders. Are they transparent? Do they make smart, long-term moves? Do they act like owners or just employees with bonuses? Your job as an investor? Be curious. Ask hard questions. Follow the money. You're not just buying stocks. You're partnering with people. Make sure they're worthy of your trust. Here's the most powerful idea in the entire book. Margin of safety. It means this. Only invest when the odds are heavily in your favor. You don't guess. You wait for the price to drop far below the real value. That's your safety net. Think of it like buying a $100 bill for $60. Even if things go wrong, you've got room to breathe. He wasn't chasing hype. He was protecting himself from downside while keeping the upside wide open. The market's unpredictable. Mistakes happen. But the margin of safety keeps you from getting burned. Don't gamble. Buy with a cushion. Because staying in the game is how you win long term. Buffett has made billions by waiting for the right pitch. He doesn't swing often, but when he does, it's with certainty. This book didn't just teach Warren Buffett how to invest. It taught him how to think, rationally, calmly, long term. And in a world screaming for your attention, that kind of intelligence is your superpower. So here's your challenge. Read The Intelligent Investor. Take notes, apply one lesson, and think like a billionaire, even if your bank account doesn't say so yet. Want a full breakdown of Buffett's investing strategy based on this book? Let me know in the comments. Like the video if you learned something new, and hit subscribe to turn your brain into a compound interest machine. Because wealth doesn't come from luck. It comes from intelligent thinking.